Hey traders, welcome back. Today is September the 2nd, 2021, and so it is time to update our results in the asymmetric trading system, the AST program, as we affectionately refer to it, for last month, for the month of August. So we are, January, February, March, April, May, June, July, August. 8 months now. I can count on both hands. 8 months into the official launch of this program. And to say that it has been a success would be a tremendous understatement. Our dual fold mandate, again, with this asset allocation model is to beat the market returns. Whatever the market does, we just want to do better than that. So, even if the market loses 20% in a year, which I know a lot of people would say, the market never loses money, right? At least that's what it feels like lately. But even if the market were to lose 20% in a year, if we could beat that and only lose, say, 10%, that would be a win. So mandate number one is beat the market returns. And maybe even more importantly, mandate number two is do it with less risk. Now, we define risk as volatility, standard deviation. So if we can get a better rate of return with a lower standard deviation, that's lower implied risk. So that's our goal in the program. 8 months into it, and again, it seems like everything that I do in my life takes more time and more money than I ever anticipate. And I don't know if I have lofty goals, but very few things in my life seem to meet my optimistic expectations. But I have to say, as frankly and honestly as I can, that the results of this program have surpassed my expectations. Our results have just been fabulous. There have been some kinks in the way, as we knew that there would be, and we are continually modifying and looking for ways to enhance this program in terms of both of our dual fold mandates. We're looking at ways to continually try to reduce risk and to try to beat the markets. So we continue to tweak, we continue to refine the program. But let's go ahead and let's get into our results for August and update you. I'm going to back out of here for just a second because in the full view here, we don't get all of the days on here. But I did start August 2nd with $40,027. That was my starting balance. We had a couple of losing days there. We got back into a winning streak. You can see, I won't go through every single day here, but you can see each documented day and the results. And I think, again, one of the key things that I find exciting about this program is that we don't have wild swings. Remember, if you can take $10,000 and make $2,000 off of it in one single day, 20% rate of return, it probably also implies that you could lose $2,000 that day, right? And so you get, risk and reward ratios, and what goes up goes down. And so one of the big things that we really liked here is you can kind of see day by day by day through the month of August is that our values do ebb and flow, but they hopefully don't change very much. And I mean that from not only the downside, but also the upside. If we make $1,000 in a day, it also serves to remind us that maybe we could have lost $1,000 in that day. And so, again, that dual fold part of the mandate of taking less risk is very critical and important. So you can see we made pretty darn good progress throughout the month. We ended up the month August 31st at 41,000, or I ended up the month at August 31st, 41,482 in my balance. I started at 40,027, and so that's about a $1,455 gain on my starting balance of 40,027, about a 3.64% gain versus the 2.9% gain in the market. We had 7 losing days, 15 winning days. That was exactly the same. We actually matched the market at that point. So one of the things that obviously helps us try to do whatever we do, whatever result we get, one of the things that helps us with trying to beat the market is that we have the ability to make money in down markets. And so when markets are losing money and markets are going down, that's generally good for us, because where the market is going to log a red number for the day, we have a pretty decent chance of logging a green number. Unfortunately, in the month of August, we didn't have a whole lot of down days in the marketplace. And so we weren't able to really stretch our legs in that aspect of the trading system. And so because of that, where we have been logging 50, 60, even 70, 75% less risk or less volatility in our allocation versus the market, this month we only we did still book in less volatility, less risk, but only 21% as measured by that standard deviation. And so our numbers, again, our numbers for the month of August, about a $1,455 gain for me on that starting balance of 40,000. That's not 40,027. It should be what, 40,000. Starting balance of $40,027. $27. There we go. So on my balance of $40,027, $1,455 gain, 3.64% gain, and again, my editor, which is me, obviously not doing a very good job here. 3.64% gain on the month. We were positive alpha. That's again one of the things that we're trying to accomplish. One of the dual fold mandates is, whatever the market does, we just want to do better, right? It's a pretty lofty goal, but we did accomplish that. We made 3.64% return for the month versus 2.9% for the S&P. And I just want to, really drive that point home. It's one thing to have a single goal or a single mandate of beating the market return. Well, there's options trades and there's futures trades and there's all kinds of trades that you can find every single day of the week that can make 10% returns in one day, right? So the goal of beating the market, that's not a out of this world goal, but the risk, of course, the risk of those kinds of trades is tremendous versus just throwing your money passively in an index fund and letting it do what it's going to do. And so it is a challenge. It is a tremendous challenge to be able to beat the market returns while enjoying lower risk. And especially today, I have said this every single day in this program for the last 8 months, that we're just salivating. We're just sitting here, just very impatiently waiting for the market to turn from bullish to bearish, because I think that that's when you're going to really see the legs of this program. When we can turn a positive return as the market is losing money, we should really start to outstrip the rate of return of the marketplace. As it is right now, 2.9%. I mean, the market is on pace for like a 35% annualized rate of return this year. That's crazy numbers. Those are just crazy numbers. So the fact that we are still not only matching that but beating that is tremendous for us. We had 15 profitable trading days in the month versus 7 losing days. That matched the market. Again, as we try to take less risk and we have a little bit more flexibility, obviously, than the market does in terms of being able to structure our trades so that they can profit when the market comes down. We strive to have less losing days than the overall market. That helps us, of course, on our risk and our volatility. We matched the market this month. It was interesting. The exact same result for the market. Market had 15 profitable days in August and 7 losing days. But we did still book in about 21% less risk or volatility than the overall market had. Again, measured by standard deviation, measured by volatility. Okay, so so far in this program here, we are 8 months in. 32.64% is our overall total gain. Now, I pull the S&P 500 numbers from investing.com's database. And I do believe that this right here is a compounded number for the S&P 500. These are compounded numbers. These are not compounded numbers. And so I do need to probably, for a apples to apples comparison, start actually compounding this. Go back to my starting balance of January 1st of this year and actually compound this number rather than just simple interest and adding it up, because this number should technically be a lot higher than this. But nevertheless, you can see that, again, pretty tough job beating a market that, January was the only losing month in this program. We had a losing month in March, and we had a marginal loss in June. But overall, still just absolutely it's like a little newborn baby. I couldn't be any more proud of our results. 32.64% total gain versus 19.92% total gain for the market as a whole. That puts us at about 61% better overall performance than the overall market, with about less than half the risk. We're right now, if you average out our standard deviation, we're around 54-55% less standard deviation, less risk than the overall market. So again, guys, I could not be more happy with this program. This is a program that I put $30,000 in at the start of the year, and was going to use that money as just more than anything, not a way to get rich, but just as a way to validate the veracity of this program, the validity of this program with real money in a real account with real trades, right? No theory, no back testing, just real, actual, real world results. And here we are 8 months later, and I'm pushing almost $42,000 in there now, and it's starting to become something substantive. Like I'm very, very excited, about what this account may mean for me and my family 10 years from now, 15 years from now. So we're very happy, obviously, with the results. We will continue to update you guys with next month, or this month, September's results in a few weeks when we get to the end of the month. Again, if you're interested in checking out the program, I do have a full 2-week free trial, no obligation trial. I'll drop a link in the comments in the description area below here, and you can check it out if you want and see for yourself kind of how I structure my trades. It takes about 5 minutes every day at the start of the morning to put your trades together. Close your laptop, walk away from it, leave it, and it sort of manages itself. So pretty exciting for our results so far. We'll talk to you guys in a month from now.